Hey guys, what's up? 𝗪𝗚𝗚 does top trading reviews. Today we're going to discuss the 7 powerful Forex risk management tips that you can use in your Forex trading. So let's begin. So the first tip in Forex risk management is do not invest money you cannot afford to lose. Very simple rule, yet a lot of people, especially beginner traders, are ignoring this rule. They believe that for some reason it won't happen to them and then they lose a lot of money. If you do not have a lot of money and you're struggling to pay the bills, I suggest you to not trade Forex in general because it's risky. You will lose money. You know, risk management is important when you trade Forex. But if you are searching for a get-rich scheme of some sort, Forex isn't it. It won't make you money rapidly, although sometimes it happens. You know, news events. We recently had 600 pip take profit low, which was reached within 1 day's time, which was crazy. But this does not happen often enough for us to even consider, you know, Forex as a get rich scheme, you know, player that will make you loads of money. That's not what happens. So basically, if you can't afford a tea bag or something or some milk, don't, you know, trade Forex. Don't invest your last earnings or your last savings on Forex because you will be too stressed. Your mental game won't be there and you will lose money. You do not want to invest your hard-earned money into Forex. You want to invest only the money you can comfortably forget about and lose it, because it's very risky. Although my trading services, you know, and VIP trading signals are there and provide profitable signals, it does not mean that we won't have any losing trades, and sometimes a week of losing trades, and without a good risk management plan, you will lose all your money. That is why it's very important that you do not invest your money you cannot afford to lose. Seriously guys, if you cannot afford to buy, you know, your kids maybe school shoes or school uniform or something, don't trade Forex. That's not gonna be an answer for your financial problems, trust me. Only trade Forex if you have a nice saving, you know, and you can afford to lose it. That's when your mental game will be a little bit different. You won't be as scared to trade, place trades, and be in our VIP trading signals. If you want to join, the link is in the description. So the second tip I want to give you is think about your risk tolerance. Very important. Think about your risk tolerance, because everyone has a different risk tolerance. You know, some people can lose $100 and don't think about it at all. Some people lose $10 and they are, you know, emotionally tired and sad because they lost, you know, on Forex or something, $10. And that is why you need to think about your risk tolerance. So this risk tolerance splits into a few things, such as your age, how long you've been trading. Very easy, you know, how long you've been trading Forex, and your age as well, because the more experience you have, the more risk tolerance you have. When I first started trading Forex initially, I was scared. I used to be paper trading all the time. If you don't know what paper trading is, it's just demo account trading for a couple of years. Then I moved on to very small amounts of money. I didn't have a lot of money at that time. I had 3 grand, and it's not a lot in Forex, believe it or not. I had 3 grand and I was doing 0.05 lot sizes every time, and I thought it was still a lot, to be fair, because at one point the markets moved 100 pips and it was like 150 to 200 pounds, you know, minus, and I was scared, you know, that I'm losing money. I had only 3 grand. You need to make sure that you're putting all the trades in the right lot sizes, that you feel comfortable and you don't lose sleep over it. On my VIP trading signals especially, because we are long-term traders, sometimes the market's gonna move, you know, 100 pips down before it starts moving back, and that's why you need to have a good risk tolerance to just not be scared and not lose sleep over, you know, trading, because the markets fluctuate all the time. Even if we have a look over here, look, the market's just fluctuating. It's on a little downtrend of consolidation over here. If we just have a look at the price range real quick, look, it moved down, no, like 200 pips, and then it moved back up 100, then it moved down, you know, another 200. You need to have a big risk tolerance level. A good way to improve your risk tolerance level is to know how much you are actually willing to lose. So decide how much you are willing to lose. That's when the stop loss comes in. You decide how much you're willing to lose. If you're only willing to lose $100 on this trade, then you set up your lot size accordingly. Doing such simple things will help you sleep at night, and you won't be worried, oh, if my trades, oh, $20 in the minus now, oh, I'm so sad. You don't think about that in Forex. All the emotions go out the window. It's all about trading charts and logical thinking. Obviously, you need to have a look at fundamental news as well, because that's where logical thinking goes out the window. For example, you think it's gonna bounce off support and then it starts shooting, breaking all support levels in all different time frames. That happens in fundamental news as well. But also a nice risk tolerance tip that I can give you that's gonna be helpful is decide how much you actually want to make money. How much money you want to make. How much money you want to make, it's very, very good. You decide your risk plan. Maybe throughout the year, you decide to make 30% on a return of your investment. So if you invest, I don't know, 10 grand, you want to make 3 grand extra. You just trade long-term trades, you follow your plan, you stick with the same lot size, which we will cover in the next tip. But deciding how much you want to make in a year or in a month is gonna remove all the risk levels in your mind for some reason. I don't know, it helps me that way. I always decide how much I want to make, maybe 50% a year. I want to basically, if I'm investing, I don't know, 20k or something, I want to make 10k this year. Is it possible? Hell yes. Is it risky? Hell yes. 50% is risky. I would say 30. That's where my FX book is. So let's move on to the third tip, which is gonna be always trade nice risk to reward ratio. About 1-2-3 is the best one. Obviously everyone's trading 1-2-3. The minimum I would trade is 1-2-2 because even if you lose 2 trades and then you win 1, you recovered, you break even. And 1-2-3 is even better. You can trade and lose 3 trades, but as long as you get 1 right, you're recovered, you're breaking even, and then you get another 1-2-3 going and you're already making a lot of money. That's why it's important to always have a nice risk to reward ratio. If you don't have a nice risk to reward ratio, you don't place the trade because it's not an optimal risk to reward ratio. It's just very, very simple Forex fundamentals. If you have a risk to reward ratio of 1-to-1, it doesn't make sense. It's like, betting in a casino on red or black, it's 50-50%. It doesn't make sense. You want the probability to be on your side, so that's why 1-to-3 is the best. 1-to-2 is the minimum, unless it's a very, very good setup. Then 1-to-2, sometimes I send it 1-to-2 on the VIP trading signals, but 1-to-3 is the ideal scenario that you should be looking for, especially if you're trading on the long-term Forex trading. Right, tip number 4, which I see most people get this wrong every time. You need to trade consistently the same lot size. A lot of people and a lot of beginners, even in my VIP trading signals group, when I say to you guys, manage your risk, please, I mean it. Manage your risk, because it happens sometimes. We have a nice, week or 2 where we make a bunch of pips, but then you keep increasing your lot size and then you keep increasing your risk, which means eventually you're gonna lose the money, because this is Forex. Sometimes we win 2 weeks and then 1 week is gonna be a shitty week and it's not gonna go profitable, and then you lose all your money because you kept increasing your lot size and increasing your risk, and that's very, very not good. You always want to keep it consistent. If you're trading one lot size, then keep trading one lot size. If you're trading 0.10 lot size, keep 0.10 lot size, keep 0.10, 0.10, have a bunch of trades 0.10 until you build your account balance. Once you build your account balance and all the trades are closed, and maybe you have like 5 grand or so, then you can increase, your lot size, maybe 0.50 or something. You place a trade every time 0.50 lot size. It doesn't matter if it's losing, winning, whatever, 0.50. Because if you don't keep a consistent lot size, it's always a bigger risk. If you make one trade 0.50 and it's doing really well, but then you get greedy for some reason and you do one lot size trade, which is double of the 0.50, and it starts losing, you already lose then even the winning trade, and you're also losing more money than expected because you increase the lot size. You're not keeping it consistent. Very, very important. Keep your lot sizes consistent on my VIP signals, on the free signals, and then you will make money. I promise you that. Right, tip number 5. Understand and control your leverage. Leverage is a good thing and a bad thing. It's like a double-edged sword. It can make you a lot of money, or you can lose all your money, and you can even go into the minus. So if you invest 1,000, you could, because of leverage, you could go into like 1,500. You could go in debt basically on some brokers. That happens, you know. Usually the standard for normal forex brokers now in the Europe is 1 to 30. You know, that's the standard leverage. They did it. It used to be like 1 to 400, 1 to 200 all the time. But some brokers in some countries, I'm not going to mention now, is like 1 to 200. And if you're one of these countries, you need to make sure you manage and control the leverage, because you can make a lot of money, you know, if you invest $1,000 and you're doing one lot size trades for some reason, risking a lot. You can make, you know, double your account, triple your account even, you know. You can make 2 to 3 grand very easily because of leverage, because the broker kind of gives you money, borrows you money in a sense. But on the other side, if the trade is not profitable and it starts moving down in the downwards direction, you will lose a lot more money as well, very, very quickly, because you have a high leverage. So if it starts moving in the wrong side of the direction, it will sink your account balance very, very quickly, and you won't even notice it. And some brokers, even as I said, will get you into debt and will try to get you even to pay their debt, you know, because you invested $1,000 and you had the high leverage and it's like 1,500 you lost, and because they borrowed your money, you need to give back the 500 as well, which is crazy. But this is what's happening in the forex markets, and that's what you need to make sure to manage your leverage. So tip number 6 that I want to give you is understanding currency correlations. You know, take currency correlations into consideration. Very, very important as well, because if you trade in euro, let's say, so more than likely other currency pairs, let's say if you're trading euro USD, it means that other currency pairs such as euro JPY, euro Swiss franc, euro AUD is gonna follow slightly the same pattern, you know, because it has a euro in it, and euro is the base currency. It's a strong currency. So if euro is going down fundamentally in other pairs, it will most likely go down on euro Swiss franc, euro AUD, euro CAD. And that is why you never place a trade such as euro USD, we're buying euro USD, but euro JPY for some reason we're selling, or euro Swiss franc we're selling. It doesn't make sense to do that, because more than likely the currency pair of euro will correlate with other charts. And that's why if euro is increasing, it will more than likely increase on other currency pairs. So you never want to place a trade in the opposite two directions, because what will happen is one of the trades will be profitable, but the other trade will be a loser. So you need to make sure to do that. If you're trading multiple trades, you need to be careful. And if you don't know much about correlation on the Forex, you can go into myfxbook.com, myfxbook.com. Let me just write it. So if you go into this website, myfxbook.com, they have an amazing little charting software over there that you can put in all the currency pairs such as euro USD and euro Swiss franc and see their current correlation. Let's say 60%, let's say 80%, sometimes it's like 95% correlation, which means it's been moving, you know, literally the same the past, you know, week or so, which tells you a lot that if one currency pair is gonna go up, it probably will be the same on the other currency pair, or very, very similar. So the last tip I want to give you is just have a trading plan. I know it sounds cliche, but you need to add all of the elements we spoke about into your trading plan. When you want to exit, you know, the trade, when you want to take your profits, how much you are willing to risk and lose money, and how much you want to, you know, make money throughout the year. You need to put in all of these rules. Like step 1, let's say, does it have support and resistance? Is it broken support and resistance? I don't know what trader you're gonna be. Some people are breakout traders, some people are, you know, long-term traders like myself, some people are scalpers, you know, that trade day trading all the time, place multiple trades. I don't do that. I think it's too stressful. I like long-term trading. I think it's the most profitable way to have a look at the charts. But this is just me. If you're other other trader, you know, other scalper or something, you might have a look at some indicators, maybe the EMA crossover. Did it happen? Yes, no, you know, is there RSI indicator there? You know, you need to put in all of these steps in place to be profitable, and you need to test it. You know, you need to test it multiple times, you know, test. Forex takes a bunch of time. You need to literally have a look at the charts all day, every day, and live in the charts basically to be successful in Forex. But once you do, and once you understand, it becomes much easier. Believe it or not, you just kind of understand. One day it just clicks. That's what happened to me. I remember I went to sleep, I didn't understand anything. It was like 5 in the morning, I didn't understand anything. My brain was just melted basically. But then the other day I woke up and I could understand everything just clicked. I understood everything in Forex markets, you know, and I'm quite profitable now. And if you want to join my VIP trading signals group, you're more than welcome to. I'll leave a link down in the description below, and hopefully these tips helped you out and somehow. If they didn't, or you don't understand something, make sure to comment so I can try to help you out, or maybe even add more tips for trading risk management in general, and I'll help you guys out. So this was 𝗪𝗓𝗪 from Top Trading Reviews, or Forex Trading Lions, and take care guys, have a nice day.